Hello friends, this is Raj Sassi from Raj Option Trading. Today is September 21, 2021. I want to talk about top fintech stocks. As we all know, fintech is an emerging trend. These companies are becoming very popular and also profitable and provide convenience to everybody. So with that, let's look at top fintech stocks and see what stocks we can buy now. So here I got top fintech stocks. We'll talk about few more stocks as we go forward. So I got here Bill.com at the top, ticker symbol BILL. As you can see here, in 1 year, company has done very good, 237% return in 1 year. And then you got Futu, again a great company, and their performance is 195% in 1 year. And then you got Upstart. It's a buy now pay later type play here. Nice performance, 155%. So what we'll do is we'll look at these companies and many more and see what's good to buy. And as you look through these companies, always pay attention to what insiders are doing and what institutions are doing. As an example, we got Futu here. Stock is down off late, but institutions are buying big time, and institutions are also buying TIGR, which is a China-based play here, up 71%. So we should pay attention to what institutions are doing and also look at the gross margin and quarter-over-quarter sales. We will look at these criterias as we look through these companies and see what's worth buying here. With that, let's jump in here and look at the top line news. From a top line news perspective, we got here Up Fintech, TIGR, Chinese based company. Looks like they have a nice 99% growth. That's a good story. We'll see if it's good to buy at these levels. And then we got your Blackstone renewable energy project. Looks like it's making good headway into clean energy. Blackstone is a great stock. We'll see if it's worth buying it here. And then you got SEC Limited, again a great stock, Asia Pac based stock. They also fell off. And Capital One plans to offer buy now and pay later. I think the buy now, pay later is a great trend. Many companies are going after it. And also, as you know, Square bought a company with this capability. And at these levels, I like many of these credit card issuers. They're all down big time. And then we got here Discover Financials, DFS. Looks like they are most trusted credit card issuer. That's a great good story for DFS here. And then we got Square. It's won the fintech race after the Afterpay acquisition. I think Jack Dorsey is doing a great job with Square. I think this is a great company to invest. And then you got your shares of Bank of America, Citigroup, JP Morgan. They all are down. It's good to buy some of these stocks. They will always come back. As there is some news about interest rate potentially going up. And then you got here one of the great Brazilian stock here, PagSeguro. I love this stock. I would be a buyer of this stock into any weakness and go from there. And then you got your steady eddy companies like Paychex, ADP. They always do well. It's good to buy them on any pullback and hold them for a while. And then you got stocks like ICE, CME, Nasdaq. All these stocks are great stocks. Let's see if we can buy some into this weakness. Even SIBO for that matter, it's also great stock. We'll see if it's worth buying these stocks here and go from there. Now let's look at the big picture here. Yesterday, the broader stock market fell off the cliff. So let's see what's going on here. What I have here is a 5-year chart of S&P 500 ETF, which is SPY. As you see here, we got a drop in around November, December time frame back in 2018. This was Jay Powell's, increasing the rates. That's why stock market fell off. Then it slowly recovered, did well, and then it again fell off around October, November of 2019. look at the timing here. Around September, October, there is some jitteriness in the stock market. Typically, it comes down, and then it recovered from it, went high, high, high. Then we have here COVID-19. Because of COVID-19, we had the steep drop here. We have never seen this much steep drop in a quick span of time. And then we had a nice recovery here. Now they're doing well. And then again, look here, around September October time frame in 2020, we had the same weakness here. This is a weakness typically happens around September October time frame, and we recovered from it nicely. We had some more downturn in say November December time frame. We recovered nicely, and then we had one more downturn sometimes in April time frame. We got past it. Now we got one more down tick here. Now we are sitting in September. There's a big candle down here, big gap down. So looking through the historical lens here, typically this is a buying opportunity. We should look at good quality companies and buy them slowly. As you look through here, around September October time frame, they always shrugged off from its downturn here. So it could be okay to buy some quality companies slowly into this weakness and slowly accumulate. So that way we have a good position. When the market is down, we can buy stocks on a bargain. Now, if you look at a broader indices, as you can see here, yesterday big drop. S&P 500 finally dropped below its 100-day moving average, as you can see here. And as you look through here, we got Nasdaq. Nasdaq was sitting pretty at 25-day moving average. Now it dropped below 50-day moving average. Slowly, it's about to touch its 100-day moving average. And then you got Dow Jones Industrial Average fell below 100-day moving average, and if this continues, it can touch 200-day moving average here. And then you got Russell here, one of the weaker segments. Russell is trying to touch its 200-day moving average, came well below 100-day moving average. So with this, we should really think through what's our game plan. I think typically what I like to do in these situations, buy some good quality companies. Today I'll be talking about fintech. There are some great fintech stocks. You could take advantage of this downturn and buy some quality stocks slowly and position your portfolio for upside potential. So with that, let's jump in here. Look at some great fintech stocks. So what I've done here is I've sorted all these fintech stocks by 1 year performance. Stock at the top here, Bill.com, great performance, 237% in 1 year. And then we got Futu and so on and so forth. The way to read this chart is really, I got here stock price and we got here insider and institution purchase. It's always good to have insider and institutions buying their own stock. We will look at some of those scenarios here. Then I got here sales and sales growth. Very important to have a great sales growth that indicates these are fundamentally good companies. Coupled with the gross margin, that's a great indicator of where company might go in the future. And then you got debt to equity, a high debt to equity ratio. You got to be a little bit careful and watch out. For example, here we got a Futu, little high, debt to equity ratio, and same story with stocks like DFS, Goldman Sachs, and even Meili, Mercado Libre, and so on and so forth. And we should look at RSI levels when you're investing. Look at the relative strength index. If it is high, say above 65 or so, wait for a little pullback. For example, Bill.com, I would wait for a little pullback. Same story with the Upstart and BX. And then you got IV percentile. If you're an options trader, pay attention. You want to sell options when IV percentile is high. For example, BX here, right now IV percentile is 88. You could sell some put option underneath the stock price and make some money that way. And also we got high IV percentile in QFIN, a low price stock. And also here we got JP Morgan, There's also high IV percentile as well as AXP here. You could sell some premium in this place. So you could do things like put option selling underneath the stock price, and also if you're comfortable, you could try selling some call option at a higher price or a call spread. Also, you can do things like strangle and iron condor. So with that, we also have institution percentage here, tells you if the institutions are loving this company and buying more and more. That's always good indicator. Then you got short ratio. At times there are great stocks, but they've got a high short ratio. That could be a good candidate to buy, especially when the stock is down. As an example, Futu here, stock has been down for a while. As you can see here, it may be okay to buy some, and we can expect a short squeeze. Same story with the TIGR, Jumia, and Shift 4, and even IIVI here. So with that, then we got here performance all the way from 5-day to 5-year. I love to see the performance in a short term as well as long term. So the moment you see a nice performance in 6 month, 1 year, 5-year, that tells you it's got more legs. It's not a one-trick pony. And then finally we got how much stock is off from its 52-week high. So that way you know whether you're buying at the top, you got to be careful, or you're buying a quality stock at a discount. So with that, let's look at few stocks into a little more detail and see if we can buy some of these great companies. First one is Futu here. Futu, as you can see here, nice institution buying here. Institutions are warming up after the stock is sold off here. And as you see here, nice sales growth. Fundamentally good company here. And gross margin a little bit less. Handily beats rule of 40. Quarter over quarter sales plus gross margin greater than 40. As you scan through here, low RSI. So from an entry point perspective, you can buy Futu at these levels and go from there. And if you're an option buyer, you could even buy call options because you're not paying too much. IV percentile is 25. That's a good one. So I think that's a good play here. You could buy Futu slowly into this weakness and accumulate. And then we got here upstart a little bit high from a RSI perspective. I would wait for both upstart and BX. On the other hand, we got TIGR and Jumia, both low RSI, and stocks have been selling off and high short ratio. So I would buy some of these stocks here into this weakness. Look at the short ratio in TIGR 47%. This can call for a nice short squeeze rally. And then you got here C. It's a great company. I love C. As of now, RSI is a little high. I will wait for a little pullback and then buy C. And then you got here Capital One, DFS, Goldman Sachs. All of them have got low RSI here. Good to buy slowly and accumulate. I think many of these have got nice sales growth here. I think that's a good one. And we got MSCI here. Right now RSI is 54. I love MSCI. It's a great company. Nice sales growth and gross margin handily beats rule of 40. And right now RSI is 54. We can buy slowly into this weakness here. And then as you scan through here, you got more. You got Shift 4. Right now RSI is pretty low here. We can buy some Shift 4. These guys are a great great fintech play here. And we got few more Square, Shopify. Both of them have got dropped off late with the RSI low here. Stock has been pulling back a little bit. It's good to buy those stocks. JP Morgan, it's a little high right now, 58 is RSI is 49. You can still buy JP Morgan at these levels with RSI 49. It's a good entry point. And then you got Tradeweb, IIVI, Nasdaq. As you can see here, all of them got low RSI here. I would buy these stocks at these levels and go from there. All of them have got nice fundamentals here with quarter over quarter sales growth plus gross margin, topping 40% easily. And then you got your PayPal. PayPal is also a good one to buy at these levels slowly and accumulate. Next, we got a few more here. As you can scan through, watch out for insider buying. For example, Affirm, institution buying 11% here. That's a good one here. We also got Coinbase and Encino, as you can see here. Coinbase and Future FTFT. Both have got nice institution buying, so it may be okay to buy along with the institutions here. And as you scan through here, look for high short ratio, black line here, high short ratio. I love black line. It's a great company. Stock has been pulled off late. Still RSI 64, little high. It was off maybe 2-3 weeks ago after the last quarterly earnings. I think right now it's a little high. I would wait for a little pullback here. On the other hand, you could look at MITK, PagSeguro, ADP. They all have pulled back nicely with a low RSI. Nice fundamental companies. I could buy those. And look at stocks I've highlighted like Paychex here, Fidelity, EEFT, and so on and so forth. All of them have come back nicely with the low RSI. All of them got strong quarter-over-quarter sales growth and gross margin. And we got few more here: ICE, SSNC, VRSK, GWRE, same story. Nice sales growth here, and RSI is relatively low for these. I would buy them, into this weakness. Look at great company like Visa here, down big. RSI is 34, completely sold off. Good to buy Visa slowly and add to your holdings here. And then you got Pfizer. Pfizer is a great company. It's been dropping off late. RSI for Pfizer is around 36, completely sold out. Good to buy some Pfizer here, along with the Coinbase, FTFT. Even MasterCard has dropped off big time off late. Good to buy some MasterCard into weakness, along with Green Dot. So with that, we got few more here. Apply the same methodology. As example, Payo here. Nice institution buying here. That's a good indicator. Low price stock could be okay to buy a little bit along with the institutions. And look at the short ratio here. Nothing great. It's all manageable here. And also look at the quarter-over-quarter sales growth plus gross margin. Nice here. So with that, I think we should look at some of these stocks here and buy slowly into this weakness. Look at the RSI levels here. They all have come back nicely. And look at the 1-year return. They're all in the negative right now. So these good companies like ENV as an example, and even QTWO, all have got nice sales growth here, along with Western Union, GPN. Stock have been falling off of late. Good to buy into this weakness and take it from there. So with that, let's jump in, look at few charts and see what we can make of. So from a chart perspective, we got Futu here. It's a Hong Kong-based financial securities trading company. Great platform. As you see here, stock is now below its 200-day moving average. And on the balance, volume is pretty steady here. I think it's a good one to buy slowly. As market recovers, this stock will come back nicely. And then you got TIGR, UpTech. Stock is down big time. Up Fintech. I would buy slowly into this weakness and accumulate. And then you got Jumia. It's a great e-commerce play. Stock has been trading sideways of late. As you can see here, IV percentile is 14, RSI is 40. Stock is oversold. Look at the on the balance volume. Even though stock is sold off in the trading range, on the balance volume is pretty steady. This tells you insiders are, the investors are buying this company even though stock is trading in the sideways. That's a good indication that stock might stabilize here and make its way higher. And then you got your Capital One. Nice looking chart. Stock has been selling off of late, trying to bounce off of its 100-day moving average. I would buy some Capital One into this weakness. On the balance, volume is pretty steady here. So with that, let's look at a few more here. We got Discover, great credit card company, trying to bounce off of its 100-day moving average. Look at on the balance volume, pretty steady here. Nice uptick in the on the balance volume. Out by some DFS into this weakness and accumulate. And same story, the Goldman Sachs completely sold off. It's bouncing off of its 100-day moving average. Out by some Goldman Sachs slowly into this weakness here. And then you got Shift 4. Shift 4 is again a fintech play. They started in the hotel industry. I think they're trying to expand out. Stock is trying to bounce off of its 200-day moving average. On the balance volume is down, but now stabilizing out by some Shift 4 into this weakness here. Right now low RSI indicates stock is sold off. And then you got Jack Dorsey Square here. Same story, trying to bounce off of its 100-day moving average. On the balance volume is pretty steady here, out by some square into this weakness also. So with that, when do you buy and sell stocks? Always pay attention to RSI levels. That tells you whether it's a good entry point to buy or should you wait for a small pullback. If the RSI is less than 55 and on the balance volume is rising, that's a good indication smart money is pouring into the stock. On the other hand, if the RSI is greater than 60, on the balance volume is falling, then don't buy. If you already own it, you can sell it slowly. And then also look for fundamentally good companies with a positive sales growth and gross margin. Always look for rule of 40, where quarter over quarter sales growth plus gross margin greater than 40%. And also look at what insiders and institutions are doing. If they're buying, that's a good indication that they have conviction. You can buy along with them. Option buyers and sellers always pay attention to the RSI levels and IV percentile. You don't want to buy when the IV percentile is high. Instead, you should be option seller. Look through these, chi for call option, put option buyers and sellers, and see if you can accommodate them into your trading journey. So with that, thank you very much. Happy investing and trading. Please subscribe.